There is a three-digit number sitting on a file somewhere with your name on it. And that number is quietly influencing some of the biggest financial decisions of your life. Whether you get approved for a mortgage, what interest rate you pay on a loan, whether your rental application succeeds, and in some industries, whether you even get the job. Most people have a vague sense that credit scores exist and matter. Far fewer actually understand what moves them, what damages them, or how to take deliberate control of them. Today, we are going to change that. By the end of this video, you will know exactly what your score means, what is affecting it right now, and the specific actions that improve it fastest. Your credit score is a numerical representation of how reliably you manage borrowed money. It is calculated by credit reference agencies using data from your financial history, your payment records, how much credit you use, how long your accounts have been open, and more. In the UK, the main agencies are Experian, Equifax, and TransUnion, and each uses a slightly different scoring scale, which is why your score can look different on different platforms. In the US, the most widely used score is your FICO score, which runs from 300 to 850. Lenders use these scores to decide how much risk you represent. Higher scores mean lower risk to the lender, and that translates directly into better rates, higher limits, and more financial options available to you. 5 factors build your credit score, and understanding their relative weight helps you prioritize where to focus your energy. Payment history is the single largest factor, accounting for roughly 35% of your FICO score in the US and similarly weighted in UK models. Do you pay on time every time? Amounts owed, also called credit utilization, makes up around 30%. This is how much of your available credit you are actually using. Length of credit history contributes about 15%. Longer established accounts signal stability. New credit inquiries account for 10%. Applying for lots of credit in a short period suggests financial stress to lenders. And credit mix. Having different types of credit makes up the remaining 10%. Focus on payment history and utilization first. They move the needle fastest. Credit utilization is the fastest lever most people can pull to improve their score, and it is the one most people overlook entirely. Utilization simply means the percentage of your available credit limit that you are currently using. If your credit card has a limit of £2,000 and your balance is $1,600, that is 80% utilization. That is damaging your score significantly, even if you pay it off in full every month. The reason? Lenders see high utilization as a sign that you are dependent on credit. The target is to keep utilization below 30% across all cards. Above 10% is even better. If you cannot reduce your balance quickly, calling your card provider to request a credit limit increase without spending more achieves the same result immediately. The single most impactful ongoing habit for your credit score is devastatingly simple. Never miss a payment. Not even the minimum. Not even by a day. A single missed payment can stay on your UK credit file for 6 years. In the US, late payments remain for 7 years. That is potentially 7 years of paying higher interest rates, being declined for better products, and having fewer financial options from one forgotten direct debit. The solution is not to rely on your memory. Set up direct debits or auto-pay for at least the minimum payment on every account. This guarantees the floor is always covered. Then pay additional amounts manually when you can. Automate the minimum. Exceed it deliberately. Never miss the base. One of the most overlooked credit score improvements available to you costs nothing and takes about 15 minutes, checking your credit report for errors. Studies consistently show that a significant percentage of credit files contain at least one inaccuracy: an account you never opened, a payment incorrectly marked as missed, an old address creating confusion about your identity. Any of these can silently drag your score down for years without you realizing it. In the UK, check your full report free on ClearScore or through Experian. In the US, you are entitled to a free annual report from each agency at annualcreditreport.com. Read every entry, dispute anything that looks incorrect directly with the agency. This is time you will never regret spending. 2 quick wins. that many people in the UK specifically never take advantage of. First, register on the electoral roll at your current address if you have not already. This single action can add a meaningful number of points to your UK credit score almost immediately because lenders and reference agencies use electoral roll data to verify your identity and confirm your address stability. If you are not registered, you are essentially invisible to part of the verification process. Second, make sure your address is recorded identically across every financial product you hold. Slight variations, street versus stit, flat versus apartment, create inconsistencies that confuse credit reference agencies and can silently suppress your score over time. Building a strong credit score is not fast, but it is straightforward and completely within your control. Pay every commitment on time without exception. Keep your credit utilization below 30%. Do not apply for multiple credit products in a short period. Check your file regularly for errors and dispute anything inaccurate. Register on the electoral roll in the UK. And be patient. Good credit history takes time to build, but the rewards compound significantly. A score above 700 in the US or a good to excellent rating in the UK means access to the best mortgage rates, the best credit card terms, and the financial flexibility that a poor score permanently closes off. Start now. The clock on your credit history is already running. Subscribe to MoneyPatch. Small steps, big change.